Good morning, and a very warm welcome to today's event, Enabling Green Financing and Green Bonds via Credit Enhancement Solutions. On behalf of InfraZamin, I, Maheen Iqbal, Chief Investment Officer, InfraZamin, extend a special welcome to the Governor of the State Bank of Pakistan, the Deputy Governors, esteemed officials from the State Bank, representatives from the Ministry of Finance, Pakistan Banks Association, representative from the British High Commission, CEOs of leading banks, and distinguished banking professionals. Today's conference brings together key stakeholders and thought leaders from the banking and financial sectors to explore opportunities for green financing in Pakistan, with a particular focus on green bonds. Through a collaborative exchange of ideas, we aim to advance sustainable finance frameworks, catalyzing growth that aligns financial returns with environmental impact. In terms of the flow of the presentation, we will start off by an inaugural note by the State Bank Governor, followed by two presentations, which will have a short Q&A session after each session, ending with a keynote from the Chairman of CEO of Pakistan Banks Association. With further ado, we begin this important gathering with the recitation of the Holy Quran, followed by the national anthem. And I would like to now request Mr. Mahad Shahbaz to recite the Holy Quran. Thank you.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد صدق الله العظيم.
Thank you, Mahad. As we begin today's event, it is our privilege to welcome our distinguished speaker for the inaugural note, Mr. Jameel Ahmed, Governor of the State Bank of Pakistan. His vision and commitment to sustainable growth has been instrumental in steering Pakistan's banking sector towards a greener and more resilient future. Please join me in welcoming Mr. Jameel Ahmed, Governor of the State Bank, for the keynote. Thank you.
Bismillah ar-Rahman ar-Rahim. Esteemed members of the Private Infrastructure Development Group, respected CEOs of banks and corporate executives, our Deputy Governors, Dr. Inayat Hussain and Salimullah Saab, other colleagues from State Bank, distinguished guests, ladies and gentlemen, Assalamu alaikum and a very good morning. I am pleased to be here today to attend this forum and welcome the delegations from the Private Infrastructure Development Group to Pakistan. I would also like to thank InfraZamin Pakistan for organizing this event on a topic that has significant global implications and where there is an urgent need and great scope for the public and private sector to work together to achieve economic and environmental sustainability. As we are all aware, climate change is causing extreme weather events that result in loss of lives, livelihoods, and critical infrastructure at an increasing frequency. Unpredictable weather events also pose substantial macroeconomic risks by destroying output of essential agriculture commodities, including food crops. These events also disrupt supply chain linkages, contribute to economic uncertainty, and create additional challenges in achieving sustainable economic growth. It is important for countries to adopt an all-encompassing policy approach to reduce their carbon footprint and thereby slow down and eventually reverse the harmful impacts of climate change. In this backdrop, countries worldwide are recognizing the urgent need to transition to net zero by utilizing sustainable economic models. With that said, I will touch upon two main themes in my speech today. First, I will contextualize Pakistan's vulnerability to climate change with the progress that we have made so far in responding to this challenge despite our macroeconomic constraints. And second, I will discuss the role of stakeholders, especially policymakers and the financial services industry, in coming up with viable solutions to this challenge. Ladies and gentlemen, Pakistan is among the 10 countries that are most vulnerable to the adverse impacts of climate change. The recent devastating floods of 2022 were an unfortunate example of our vulnerability to the changing climate patterns. Apart from the devastating loss of lives, the floods resulted in damages and economic losses that were estimated to some around $30 billion. This is despite the fact that Pakistan contributes negligibly to global carbon emissions, which are a major driver of climate change. Moreover, in line with the Paris Agreement, Pakistan has committed to unconditionally reduce its overall projected emissions by 15% by 2030. We have also committed to reduce emissions by a further 35% conditional on the availability of required external financing. To achieve the emissions target, Pakistan has planned to generate 60% of all energy from renewable sources. In spite of significant macroeconomic challenges over the past couple of years, we have made important strides toward sustainable energy transition. In fact, Pakistan already stands at a comparatively cleaner position relative to other Asian low and middle income economies in terms of the overall energy mix. Moreover, we are also transitioning away from fossil fuels at a faster rate than many regional economies. According to global data compiled by the Energy Institute, the share of fossil fuels in Pakistan's overall energy consumption has declined by 4.8 percentage points, from 86.7% in 2019 to 81.9% in 2023. In the same period, the average share of fossil fuels in low and middle income countries declined by just 0.8 percentage points, from 90.8% to 90%. Having said this, we know that we need to do a lot more to bring down our collective carbon footprint and achieve the emissions targets. We believe this is important for achieving sustainable growth in the future. Ladies and gentlemen, this brings me to the second theme of my speech about the role that the public and private sectors need to play in order to make our country and the economy more resilient to adverse impacts of climate change. For the government's part, it has been taking a number of measures, largely under the Ministry of Climate Change. The government has developed a comprehensive, resilient recovery, rehabilitation, and reconstruction framework to ensure a resilient recovery from natural disasters. The government also introduced the National Clean Air Policy to tackle the issue of air pollution. Moreover, under a great example of public-private partnership, multiple foreign firms are providing technical assistance to provincial governments to come up with and implement clean air action plans. The government is also geared towards increasing the availability and adoption of electric and hybrid vehicles in the country. The State Bank of Pakistan, being a dynamic regulator, is leading from the front to provide a conducive environment to the financial industry and businesses to achieve our common goals of achieving climate resilience. For this purpose, SBP has taken both direct and indirect measures. Under the direct measures, SBP has introduced refinancing schemes for renewable energy, whereby financing of rupees 94.7 billion has been disbursed by the end of June 2024. The scheme has provided financing to more than 4,500 renewable energy projects, having a cumulative energy generation capacity of almost 2,061 megawatts. Whereas under the indirect measures, the State Bank aims to improve the capacity of the regulated entities to support uptake of green financing and enhance their resilience. In this regard, SBP issued guidelines on green banking with a view to enabling our regulated entities to recognize and prepare for managing environmental risks emerging from their businesses and operations. In addition, SBP has issued guidelines for efficient water management financing and introduced Environment and Social Risk Management Implementation Manual. The manual provides a robust framework for our regulated entities to integrate climate-related risks into their risk management practices. Moreover, in collaboration with the World Bank, State Bank of Pakistan is developing a comprehensive green taxonomy, which will establish a standardized framework for classification of green and transitional activities. The taxonomy will provide market players a common reference to identify and assess environmentally and socially sustainable projects and economic activities. A well-defined green taxonomy will not only facilitate investment in sustainable projects, but will also enhance transparency and accountability. I am confident that this will further streamline green product development with the financial sector. Going forward, we at the State Bank of Pakistan have included risk from climate change as one of the key themes in our strategic plan 2023-28, which identifies a range of goals and policy initiatives that we will take over the next 5 years to ensure sustainable growth. This theme gels in nicely with other themes in the plan, including technological innovation, diversity and inclusion, productivity and competitiveness, and strategic communication. Ladies and gentlemen, next I would like to discuss the role of the financial sector and private investors such as the Private Infrastructure Development Group. The financial sector is a critical part of the solution to the challenges posed by the climate change. Achieving a greener and climate-resilient economy is an enormous task, which requires a substantial amount of financing and strong and scientific and technical capabilities. According to the government's estimates, financing Pakistan's energy transition would require billions of dollars of financing every year. While such a huge amount appears to be daunting, it also offers vast opportunities to domestic and international financial institutions. These institutions can develop and launch effective and profitable green financing products. At the same time, we must recognize that it is imperative to substantially increase credit allocation to projects that enhance climate resilience and promote environmentally sustainable growth. It is essential that we leverage our financial sector's potential to align with the global shift towards sustainability, thereby contributing to both our national priorities and international commitments. Let me reiterate the wealth of opportunities that lie ahead for us. The still largely untapped market for green finance represents significant prospects for our financial institutions to finance sustainable projects that can yield long-term benefits for our economy and society. Encouragingly, ample funding is being offered globally for green financing of projects. Multilateral institutions including IMF, World Bank, Asian Development Bank, Asian Infrastructure Investment Bank have all expressed their eagerness in facilitating the global energy transition, especially for developing economies. Moreover, socially responsible investors are increasingly seeking avenues to invest in green initiatives. According to Climate Bonds Initiative, the cumulative issuance of green bonds has exceeded 3.4 trillion US dollars until October 2024, which signifies a growing market for these products. For us in Pakistan, it is essential to tap some of these green compliant financing solutions and access the vast pool of available international capital. This is not just an opportunity for economic gains for our economy and financial sector. It is also a chance to align with global sustainability efforts and demonstrate our commitment to responsible banking. On the home front, there is a need to actively work on designing commercially feasible projects and explore retiring existing fossil fuel-based projects. The private sector will need to wholeheartedly come on board for the clean energy agenda. While undertaking capital expansion or new greenfield projects, the private businesses should also consider environmental sustainability concerns and plan accordingly. This will also allow it to potentially raise external financing from institutional investors looking to finance green projects. Ladies and gentlemen, I expect that insights gleaned from today's discussions on international case studies and product development opportunities in the local market can serve as a blueprint for our collective actions moving forward. I encourage all participating financial institutions to explore the diverse options available for developing and marketing green financial products. This includes not only green bonds, but also green loans and other instruments tailored to support sustainable projects. It is essential that we remain open to innovation and adaptive to the evolving financial landscape. While concluding, let me emphasize that by pooling resources and expertise, we can create a mutually beneficial framework for financing sustainable development initiatives. The successful implementation of these models and the resultant green investment will help in addressing the challenges of climate change and stimulating the sustainable economic growth and job creation. Let us embrace this opportunity to work together toward a sustainable financial future for our country and our planet. The steps we take today will shape the landscape of tomorrow, fostering resilience, sustainability, and inclusivity in our economy. Together, we can pave the way for a greener and more prosperous future for Pakistan. Thank you so much for your attention, please.
Thank you, Mr. Ahmed, for sharing your vision and setting an inspiring tone for our discussions today. Now, I would like to invite our next speaker, Mr. Philip Skinner, Managing Director, Middle East, North Africa, and Pakistan at GuarantCo. With extensive experience in financing solutions supporting infrastructure growth in emerging markets, Mr. Philip Skinner will share his role of PIDG in enhancing green bonds issuances globally. His presentation would also cover case studies of green bonds and green financing initiatives that PIDG has supported worldwide. Post the presentation, there'll be a short Q&A session, after which we'll break for a short tea break. Now I would like to welcome Mr. Philip Skinner.
Thank you. I always have to move these up a little bit whenever I speak. Good morning, everyone. Absolute pleasure to be here and be among such distinguished guests. Thank you, Mr. Governor, for your speech. I think what was particularly good of you is to highlight the urgency of this situation, but also the things that Pakistan is already doing, supported by the State Bank, as well as a number of the private sector participants that I meet with in this room regularly. So thank you for that. You've set the scene very nicely for hopefully what I'm going to say. Just to introduce myself a little bit further, Maheen's given the job title. I'm from the UK, based in London. I'm a very keen cricket fan, and I'm going to thank you all in advance, particularly you, 𝐻𝐻𝐻𝐵, for not bringing up the series defeat recently. Also, as an Englishman, I'm wishing you all luck today against the Australians, because that is the most important thing of all, that we beat the Australians. Okay. So just to give you a very quick overview of what I'm going to speak to today, I'm going to give you a bit of an introduction to the pitch where GuarantCo and InfraZamin sit in within that family of infrastructure companies. I'm going to talk about what exactly is a green bond, hopefully try and demystify some of the concepts there. We're going to look at some of the investment themes already highlighted this morning, where funds are flowing into the green, social and sustainable bond market. We're going to explore some of the benefits, but also some of the critiques. Let's confront some of the critiques of green bonds. And then I'm going to focus in on some case studies of our experience from other markets. So just to position GuarantCo and InfraZamin. So GuarantCo is the global guarantee arm of the Private Infrastructure Development Group, or the PIDG for short. The PIDG is a specialist infrastructure investor that mobilizes private sector investment into low-income countries. InfraZamin is our local guarantee arm that we set up with our sister company, 𝐼nfraCo 𝐀𝐴, 3 years ago, and we're very pleased with the successes that they've had to date. Our funding comes from a number of G12 governments. To dive into that into a bit more detail, we've received $2 billion of funding from those governments over the last 25 years of operations. We've recycled that 3 times into around $6 billion of commitments to infrastructure projects, enabling $43 billion of investment, of which 27 is coming from the private sector. That's going into over 240 projects in over 43 countries. Our focus is across Africa, South Asia, and Southeast Asia, as you can see from the map here. Now, specifically in the green and social bond space, we are not green bond experts. We're infrastructure specialists. But what we have managed to achieve, and what we're quite well known for, is achieving a number of first-of-a-kinds. So we, as a group, have supported the first green bonds in Cambodia, Vietnam, Zambia, Kenya in East Africa, and Bangladesh. And I'll go into some of these in more detail later on. Specifically here in Pakistan, we've been operational since 2012, made a number of investments across equity, grants, and guarantees. So some wind projects that you'll recognize in the renewable energy sector. Grants, we've supported PPP work on the Hub Canal. We've supported the Roshni Baji program for female engineers with K Electric. And then some of the guarantee deals that hopefully you'll recognize from both GuarantCo and InfraZamin on the right there. Now, what is a green bond? How many of you in this room, I certainly put myself in this category, feel like this when people start talking about green bonds? Talk about green bonds, social bonds, impact bonds, SDG bonds, blue bonds. What does it all mean? It sounds incredibly complicated. What I'm hoping to do today is to demystify this. It's not complicated. And what we're seeing is that the market is sort of centering in on a sort of an agreed categorization of all of these different labels, and it boils down into 4. Green, social, sustainable. Sustainable being having both green and social elements together. And then the 4th being sustainable linked bonds. Now, the first 3 are distinguished by the fact they are use of proceeds bonds. So the idea is that the funds that have been raised are being directed towards specific projects, specific eligible green projects, whereas the sustainable linked bonds are more of an ex post type outcomes-based financing, whereby the borrower is rewarded for hitting certain KPIs linked to green, social, or sustainability. Okay, so really 4 categories, of which there's 2 main types, and you can boil everything down to this. So if it is a blue bond, well, that's going to sit in the green circle. If it's a gender bond, an affordable housing bond, that might be in your social sector. If it's an SDG bond, well, that's probably sitting in your sustainable overlap because it'll have elements of both green and social in it. So let's just look in detail first at the use of proceed bonds. So the international voluntary standards have been established or led by, I suppose, by the International Capital Markets Association and their green bond principles. This market developed initially through green bonds and has expanded into social bonds, sustainability bonds. So ICMA have really led the way, but there's also equivalent standards from the loan markets associations in Asia, Europe, and America. However, don't get confused by it. They basically all say the same thing. They all boil down to the same use of proceeds concept, right? Which has 4 core components. The first of which is around the use of proceeds. So what are the eligible green projects that the funds are being directed towards? The ICMA itself does not take a stance on what is the optimal solution, but instead encourage reference to national, international, or independent taxonomies. So it's very, very good to hear that the Pakistan taxonomy is on its way. To give you an example of probably the most well-known independent taxonomy, which was referred to by the governor earlier, is the Climate Bonds Initiative. And you can see within the different sectors, there will be specific guidelines for what is and isn't green. So when I started working in this space, the Climate Bonds Initiative didn't have certification criteria for hydro, for example. It was quite controversial. Was hydro green or not? A lot of concrete, flooding of lands, etc. But today they have criteria which can help you as an investor or an issuer identify whether your hydro can be classified as green or not. There are other criteria which are under development. It's interesting, so for like transmission and distribution, and others that we may not see. Nuclear, aviation, obviously clearly quite controversial. If you look historically where most of the issuances have been, they've been in either the energy, transportation, or building sectors. The next step, or the next core component, is around the process for evaluating whether your project meets those green eligibility criteria. And you have to outline your process for identifying it. You have to disclose all of this stuff, as well as identifying the risks associated with actually realizing those positive climate outcomes. Management of proceeds is critical, and this is actually one of the benefits of the green bonds, that typically funds will be, it's more like a project, for those of you familiar with project finance in this room, it's more of a sort of project finance type structure where you'll have dedicated accounts that funds are flowing through, so you can trace the funds and you know that they are going to those green projects, and so you're achieving those green outcomes. And lastly, you must report on the outcomes of the use of proceeds, review it annually, and third-party verification is recommended. It's recommended under ICMA, but in reality, if you want credibility, you need to get this verified by a third party. So just to remind us again, before we move on to sustainable linked bonds, we've just covered use of proceeds, which is an ex-ante evaluation of where the funds are flowing. And we're now going to move on to the ex-post outcomes-based financing, where we're looking at the KPIs that will be achieved as a result of that financing. Similar core components, this time 5, legislated or voluntary standards set out by ICMA and the LMAs. There are a number of standards that build on top of ICMA and LMA, but they all tend to sort of focus on this as their baseline. The first step with a sustainability-linked bond or loan is to select your KPIs. They need to be relevant, they need to be material, they need to be of strategic significance to your business, and they need to be measurable, quantifiable, and externally verifiable. You then need to set a KPI against those targets. And this needs to be beyond the business as usual trajectory. So you can't say, oh, we're going to decarbonize, reduce our... Sorry, I should mention, what are the typical KPIs that you might see? There might be a decarbonization KPI, so reducing tons of CO2, or it might be a water efficiency target. Or if it's a social bond, it could be a female employment target that you've set yourself. But it has to be beyond a business as usual trajectory. So there's nothing, no one's going to give you any benefit. You say, oh, I'm going to decarbonize by 10% if the grid is going to decarbonize by 10% anyway, right? And you're taking electricity from the grid. So you can't claim that. It has to be beyond a business as usual scenario. And ideally compared to a benchmark. So if your industry association has set a target for reducing water efficiency, say, in the sector, that is where your KPI should be set or beyond it. Now, this is the most interesting feature, that you will see a coupon or a margin adjustment resulting from hitting that KPI. So you as an issuer or borrower, if you hit those KPIs, you can expect your margin or your coupon to come down. And that is reflecting, from the investor's perspective, a reduction in risk, because you are acknowledging that your client is confronting the climate transition risks that they're facing and planning for the future. Reporting obligations very similar to use of proceeds bonds. Verification in this case is actually mandatory for a sustainability-linked bond. But as I said earlier, really to be taken credibly, you need to be doing third-party validation. So what's been happening? The governor gave the statistics of 3.4 trillion of green bond issuances. When you add social and sustainable and sustainability linked, we've actually hit 5 trillion this year. But interestingly, there's another 1 trillion out there which is claiming to be green, social, or sustainable, but is considered ineligible because they haven't met the core standards or the base standards of the green bond principles. So that's 20%, right, in addition, that is considered ineligible, and that is the greenwashing segment that we are concerned about, and we don't want to be going down that route as a nation. You can see here that green, if you took this graph backwards, you'd see majority green bonds. Social sustainable are more of a recent phenomenon in terms of labeling, and sustainability linked bonds are still relatively new as a concept, but I know are actively being explored by banks here in Pakistan. So how does Pakistan compare to its peers? Obviously, this picture isn't great. Maheen asked me to put Bangladesh on there as well, because they're also down at 1, and Sri Lanka's at 0. But jokes aside, it's not a good picture. And the key message that needs to be taken away from this slide is that there is a lot of climate finance capital out there. I work for a DFI. The prominence on our own climate-related KPIs in terms of how we direct our financial support, we can operate across 90 countries, and where we have the opportunity to flow funds to a green certified project over one that's not, then it can be quite difficult to justify the one that's not. So it's important that Pakistan makes some progress to catch up with some of its peers here. Why issue a green bond? Well, let's break that down. Looking at the issuer themselves, We would expect increased investor demand. So I've just talked about the demand from DFIs for these types of instruments, potentially leading to pricing benefits. It's also a strong argument for increasing the internal capacity of both the corporates that are issuing these instruments, as well as the banks and institutional investors who are investing in them. For business strategic reasons, and it means that they are thinking about climate transition risk, but also there are some reporting requirements coming down the line. So the Task Force for Climate-Related Financial Disclosures, which came out of the COP process, has now been fully integrated into IFRS standards. So in the UK, for instance, if you have more than 500 employees in your company, you have to report under IFRS S1, S2. I expect that to be coming very shortly in Pakistan as well. And so if you have built up this internal capacity around green bonds, you're well placed also to address the other reporting requirements that are coming down the track. There's also the branding point. We know that with a lot of corporates, there is positive brand association with being associated with climate positive activities. For the investor, when you have a borrower or an issuer who is certifying their activities, that is a signal of their engagement with climate risk issues and their planning for the future and transition risks. It also, which I think is quite reassuring for many investors, is you know exactly where your funds are flowing, right, in these structures. So there's no question of, oh, I gave this loan, I've no idea where it went. You know exactly where it goes with a green bond. And lastly, thinking about investors' own sustainability requirements, again, referring back to IFRS, you're preparing yourself well for that with your own internal capacity. Sorry, just go back one. And lastly, on societal benefits, and I think this is the most important one for the audience in this room as leaders of major financial institutions, regulators, government, etc., that we cannot meet the goals of the Paris Climate Change Agreement and Pakistan's nationally determined contribution towards that without mobilizing the private sector. And so these activities increase the institutional capacity and domestic capacity to direct private capital towards these positive outcomes. It also increases the market's ability to analyze climate risks and prepare for them in the future, and increases, coming back to this same point about attractiveness to international investors. We're improving things there. Okay, so let's turn to some of the critiques, and I'm sure you've all heard these sentiments echoed by the issues. Green bonds are expensive, what's the point? You know, I'm gonna have to spend all this money and I can get the debt away anyway, I don't have to label it, and I'm gonna do that anyway. The investors say, well, this is too complicated, and society at large is asking the question around greenwashing. Now, to respond to some of these points, on the cost point, yes, there is a cost, but there is also a potential, what they call a greenium, associated with that. If you've got increased competition, it can also be achieved through some regulatory incentives, so I think Maheen is going to speak to you later. But also it's not as expensive as you think. And for all of those first-of-a-kind green bonds that Pitch has worked on, we're talking, as we'll see on the next slide as well, in the region of $20,000 to $30,000 to certify and verify a green bond issuance. It's not a huge amount, but for the issuer itself, it is a first-mover cost that is benefiting the market as a whole. And so we believe that institutions like the Pitch and other institutions that are funded through the likes of FCO and the British High Commission here should be supporting that, as well as national governments. On the complication point, hopefully I've dealt with that. You agree with me, it's not as complicated as we all think. And we also have to recognize that our competitors, both nationally and internationally, are working this out, right? And then on the greenwashing point, now this is critical. We run the risk of greenwashing if all parties that are building this market don't work together. So we need both the issuers, the investors, and the regulators, governments, to work together to build high integrity markets, and that comes through initiatives such as the Green Taxonomy. So just going to turn to some of GuarantCo's transactions and tell you a little bit more about them. The first green bond we did was with Acorn. Acorn is an affordable student accommodation provider in Kenya. The use of proceeds for that bond was to build affordable student buildings themselves. It was done under the Climate Bonds Initiative standard and verified by DNV. 𝐻TA supported the costs of that. The second one we did was with EVNF, which is a non-banking financial institution, NBFI, in Vietnam. And there the funds were directed towards eligible green projects such as rooftop solar installations on the SME portfolio within the bank, the NBFI. That was followed up by Runner Auto in Bangladesh, which is the one green bond in Bangladesh. There we funded the manufacturing capability to produce compressed gas-powered tuk-tuks. So helping Bangladesh transition from petrol to compressed gas as a transition towards EV. Again, supported by 𝐻TA. And then, actually, it's not our most recent one. Our most recent one was closed last week. It's not been announced yet, but we just done a sustainable aquaculture deal in Vietnam. But the most recent one I can tell you about is Cellcard, which is a telecoms business in Cambodia. And the use of proceeds there were to fund the solarization of the telecom towers. Now let's delve in a little bit more detail into the Acorn green bond, which is a transaction I personally worked on. And I'm going to take you back to the 4 core principles that are present in all the internationally recognized standards: use of proceeds, process for project evaluation, management of proceeds, and reporting. So the use of proceeds, as I mentioned already, was these green buildings. What was the framework that they used to define green buildings? Well, that was the climate bond standard set out by the Climate Bonds Initiative. Second step, how do you evaluate that you're actually aligning with that standard? Well, that's where they use the IFC EDGE certification. The IFC EDGE certification is all about improving the efficiency of your building design. So this comes in the project design stage when you've got your architects at the drawing table, and you need to consider how you are improving water efficiency, energy efficiency, but also the embedded carbon within the building materials you're using themselves. The design was able to achieve EDGE certification, therefore satisfying the climate bond standard. Management of proceeds, as I mentioned earlier, project finance style. We had Standard Bank as the account bank managing this, so we knew exactly where the funds were going. They were only released from the project accounts upon receipt of invoice from the contractors. And then everything, if you go on the Acorn website, you can see all of their sustainability reporting online, as well as the third-party verification reports, in this case from DNV, which is a Danish outfit. However, there was one major problem with getting this bond away. We've done all this, but there's still one major problem, and that problem was investor confidence. So at this point, there had not been a single corporate bond issuance in Kenya for 3 years. There had been 2 reasonably high-profile corporate bond issuances that completely spooked the market, and the institutional investors had just stopped investing in corporates or only investing in T-bills. So that was problem number 1. Problem number 2, Acorn. They'd never been to market. So the institutional investors completely unfamiliar with Acorn. Problem number 3, they'd never invested in student accommodation before. So a completely new asset class. Problem number 4, they'd never done a green bond. What the hell's a green bond, right? So how do we solve that? With a guarantee. So GuarantCo came in, we wrapped the bond with a 50% guarantee of principal, And that resulted in a rating upgrade actually to B1, which is one notch above the Kenyan sovereign, given that GuarantCo is a AA minus Fitch A1 Moody's internationally rated entity. And we were able to get the bond away. So what happened next? As I mentioned, this was the first green bond in East Africa. So the publicity that came off the back of this was enormous. We dual listed the bond both on the Nairobi Stock Exchange as well as the London Stock Exchange International Securities Market. President Kenyatta himself came to London to ring the bell. We managed to reopen the corporate bond market. We saw a number of corporate bond issuances follow. Unfortunately, 2022, with Russia-Ukraine interest rates going up, the corporate bond markets were frozen out again. But we have seen two further green loan issuances that tapped the green loan market instead of the green bond market because the bond markets were closed to the interest rates. So one of them was Energy Turkana, which is a large wind farm. And the other is Kenya Power, which is the transmission and distribution company in Kenya. And trust me, if Kenya Power can issue a green loan, Care Electric can issue a green loan, right? So we need to start seeing these things happen here in Pakistan. I have a short video I hope we can show now, just on this. Thank you.
Green bonds are debt instruments which of course raise proceeds which are applied towards climate-friendly projects. We acknowledge the fact that climate environment is very important to us. We look at issuance of securities which of course give us monies used for climate-related projects. It means we are caring about the climate and also environment.
For this inaugural green bond, we worked with two pinch entities. So we work with Pinch TA, which provides technical assistance, and GuarantCo. Pinch TA came in first to provide technical assistance, a returnable grant that was able to fund the legal work and the structuring of the green bond. When that had been done, GuarantCo came in to provide a 50% guarantee on principal and interest to investors.
As Acorn, the first thing we had to do was to make sure that we're able to meet the use of proceeds requirement, which meant that all the assets underlying that were going to be certified by the bond were actually green. And this had to be certified under a known or a global benchmark. So all our assets were actually certified under the IFC EDGE certification, and EDGE stands for Excellence in Design for Greater Efficiencies.
January of 2020, we went and listed it on the Nairobi Securities Exchange as the first listed project bond. And then a week later, we went and listed it in what is called the International Securities Market of the London Stock Exchange. Since then, we've raised a substantial amount of capital, actually more than 30 billion shillings from other investors, banks and DFIs, because of the credibility and the visibility that the listings brought to the bond, which has really helped us in our journey of building what is today the largest portfolio of student housing in Africa.
For me, it is the impact it has brought to those students who perhaps may not have had the hostels available as we saw in earlier years. It has also brought the awareness that you can raise a lot of money as long as you are dedicating projects which are green. And there are many projects which are green. And we're thinking they need to look at how this was done and of course take that way so that they can raise monies which are very much available.
With the green bond, we're able to develop 8 properties, and we're now providing clean, safe, affordable accommodation to over 7,200 students with a specific focus on the girl child. The other thing that we've also been able to do is to just create vibrant communities for our students. And this has actually driven behavioral change amongst them, and we're contributing towards raising future leaders for tomorrow.
Thank you. So hopefully that has inspired some of you in this room to what is possible. And I strongly believe that there are dozens, if not hundreds, of opportunities like that waiting here in Pakistan. So just to make a few concluding remarks. The first, I hope you're going to leave this room convinced that it's not as complicated as it may at first seem. Yes, there are technical aspects to it. Yes, you will have to involve technical experts. I hope that we can build that technical expertise here in Pakistan. I strongly believe that's something that you can do quite quickly and should do quite quickly. But don't be intimidated. Secondly, support is available. So I've mentioned support available from PIDGE-TA if it's a project that's associated with GuarantCo or InfraZamin, but of course, it's going to need more than us, and there are plenty of other institutions that are looking at this, other DFIs and banks, etc. There's other funding available, made available by the British High Commission through FCDO, and that's coming through different channels here in Pakistan. We can help you locate that, so please, if you are looking for it, please come speak to InfraZamin, GuarantCo, or the British High Commission here in the corner. Thirdly, remember the power of the guarantee in that Acorn story. When we are talking about green, we are quite often talking about new issuers, new technologies, new sectors. Yeah? And a guarantee instrument can help to just de-risk, credit enhance, and reduce the number of new things that investors have to process all at one time. Lastly, hopefully this point has come out, that Pakistan is in an internationally competitive market for climate capital, and increasingly capital is being directed towards specific climate outcomes. But I want to end quite positively on that note, because having spent the last 15 years of my career investing in infrastructure projects across Africa, South Asia, Southeast Asia, I can confidently say, I've been traveling here since 2017, 2 or 3 times a year, that the capacity within Pakistan to leapfrog up that chart is huge. Absolutely convinced of it. And there's many countries on that chart I showed earlier which have far less capacity to do this than Pakistan does. So I hope that that is a real motivating thought for you, and we hope that we can support you as much as we can on that journey. Thank you. So I don't know how I'm doing for time, but there was the opportunity to take any questions that anyone might have. So thank you. I don't know if there's a mic in the room.
Thank you, Philip, for such a nice presentation. I'm Sama from the Central Bank. So I have 2 questions. One is conceptual and the second one is on the practical side. On conceptual side, out of the 2 categories of bonds, sustainable bond and sustainability linked bond,
yeah.
if they are issued for the same amount, which one has a deeper impact on sustainability? So that's a sort of a conceptual question. The other one is on the practical side. When I was studying, you see, the only 2 countries which have issued sovereign sustainability-linked bonds are Chile and Uruguay, and no other country. So is there a specific reason that the sovereigns are not inclined toward sustainability-linked green bonds compared to the private sector? Thank you.
Thank you. 2 very good questions. Thank you. I think your first question, it is very conceptual, and it's quite difficult to answer a conceptual question when you're not looking at the actual, an actual project or company in question. But what I would say is this, is the use of proceeds bonds have the benefit of a certain degree of simplicity, right? If you are funding a renewable energy project, you're putting up a wind farm, you're putting solar panels up, it's relatively simple to go down the use of proceeds route, and it's not that controversial either. So, the greenwashing sort of questions are not that complicated. And you should have reasonable confidence, given the way that the grid is set up, that you know that those renewable electrons will be exported and used. For other metrics around, maybe if it's water efficiency use or female employment, perhaps, perhaps a KPI-based structure is more effective. And so there's a place for both, but I think it's, as you see, and maybe this is the answer to your second question, this sustainability-linked structures are much newer to this market. And so they are still being tested and tried out, and I think we'll see that market develop. But in regards to the sovereigns, I think it's the same issue, right? But I expect to see more of this as time progresses.
Hello, Philip. Thank you for, this is Mariam. Thank you for breaking down the green bond framework for us in such simple terms. I wanted to ask, what lessons can Pakistan learn from green bond frameworks from other countries like China and Germany? And what actual elements are applicable for us in the local market?
Okay, I am going to be a bit cheeky and park that question because I think Maheen is going to cover it quite well in her next presentation. Is that okay, Maheen? Yeah. But thank you. It's a good question. Yeah.
Thank you very much for very informative presentation. So just two simple questions. One is that you mentioned the project evaluation and verification. I understand these actually convey the same thing. So who is actually sort of eligible for this verification or for evaluation? Is it, for example, any credible entity, like, for example, internationally accredited accounting firm, or is it some criteria or some enlistment? So that is one. The second is, as you mentioned, that there are costs to this evaluation. Although those costs are not that high. And then if you want credit enhancement, like, for example, from GuarantCo, then of course you will have to pay some sort of commission or fee. So the issuers would only be interested if it is beneficial for them, after taking into account all these costs, if they can issue securities at relatively cheaper rates. So can you explain a bit, for example, the range of commission that is charged typically by entities like, for example, GuarantCo, and how much, for example, the issuer can save on issuance of green bonds?
Okay, thank you. So your first question on the verifiers, so that depends on the standard by which you are assessing your eligible green project under the use of proceeds framework. And the standard will have accredited certain institutions in their capacity to verify that. So those lists are all publicly available. But this is to my point earlier, I speak with companies here in Pakistan who I know could walk through that process. Right? So I think that is something that, but at the moment, there's not much incentive for them to invest in that area because we don't have the issuers. So we need the more progressive issuers and companies to take this on and to be supported by all of us who can. And then we'll see that industry pick up quite quickly, I'm sure. And those rates, those dollar rates of $20,000, $30,000, I think it can come down even further. The cost of the issuance itself. As guarantors, we are asked regularly about cost. And the truth of the matter is that the real reason for using a guarantee for something like this is not for a pricing arbitrage, it's because you cannot access that capital. Right? So in the Acorn case, they just could not access the capital markets. So it wasn't, 10% or 12%, it was that price, I think it priced about 12% in the end, but it was that price or nothing. They couldn't get the capital. So you need a guarantee, and that's where the guarantee can be most effective. Now, if we're going to go academic on this and take it to sort of the theory, the guarantee, if it's a AA minus, we're AAA PACRA. So both GuarantCo and InfraZamin have a 20% RWA here in Pakistan. So it's a complete credit substitution. So the lender should be reducing their margin to reflect the risk of a GuarantCo or an InfraZamin guarantee, which should be bringing down their margin. And in perfect markets, you would expect that to be offset by the guarantee fee. Of course, we don't live in perfect markets, so in reality, sometimes we find the guarantee can marginally increase the cost, sometimes it can bring it down. But yeah, the main reason is to unlock capital that is otherwise unavailable. There's a question here.
Thank you very much. Just taking the Dr. Inayat's question further about the verifiers. The European Union has just announced the verification process by next year. And I believe there are about more than 15 verifiers right now. And S&P and Moody's have started their work about a couple of years back as SPO providers. Don't you think with this verification in European Union would somehow or the other dampen the market, because there will be many verifiers would be out of the market? And looking at East, the Hong Kong Monetary Authority, they already have a very good process for verification. And now you showed India. I don't see any verifiers there officially in India. Then DNV like Sustainalytics. What do you think happened to them by next year, for greenwashing?
It's a great question. It's been 15 years since I've done anything in European markets or developed markets at all. So my involvement with what's going on in the EU taxonomy is not that. But what I would say is that there has to be a balance, because what the regulators are trying to achieve is the highest integrity markets that they can establish. They want to remove as much greenwashing as they can. So they want to ensure that the verifiers are of the highest standard possible, while still retaining sufficient competition within that market. So there's price tension and it's not increasing cost. So that is, I think, the balance that regulators have to play in the EU or anywhere in the world. One more, yeah. Thank you.
Just one. I wanted to ask, and specifically we can talk about the housing case study. The investor base that was attracted to the bond issuance, was it domestic or was it global? And two, was the bond issued in hard currency or local currency? And is that generally the case with some of the other issuances that you've seen? Are they hard currency or local currency issuances? Thank you.
Yeah, good question. So in the Acorn Green Bond case, it was local institutional investors, so pension and insurance funds based in Kenya. I think globally, if you look at that $5 trillion worth of issuances, it will be all in, a vast majority will be in hard currencies. As GuarantCo and InfraZamin, we have a specific local currency mandate. And what we believe very strongly is that if a company is earning revenues in local currency, we want to try and support it raise financing in local currency. As I think everyone in this room will be acutely aware, if you mismatch those two things, then your company can get into big problems. So we are here to support local currency capital market development through the guarantee product. Okay, well, I'll be around in the tea break, and I'm very happy to take additional questions then. Oh, sorry, I missed one. No, please.
Philip, thank you for that excellent presentation. I just had a question. You mentioned very clearly that there's the access to capital markets. That's an important driver here. But I think another key driver, as we would all agree, is the commercial aspect of why businesses actually move towards greenifying their businesses, if that's the right word. And it's driven for commercial reasons. And we find that a lot of our customers that are looking for moving in a green direction are responding to commercial requirements of their buyers
Yep.
outside,
Yep.
let's say our exporters, for instance.
Yeah.
So that kind of an ecosystem that needs to be developed within Pakistan would require that either through commercial reasons or through policy initiatives, that this becomes a requirement that more and more businesses need to or are forced to move towards greenifying their businesses. And hence, the demand for green financing will also grow. So I think I just would like to hear from you if there are any examples you could give of how governments have, within their domestic markets, helped to move the whole economy towards a more green infrastructure.
Yeah, great question. My answer to that is we need to identify the pioneers, the champions. Edward Karate, who's the CEO of Acorn there, he is a pioneer, he is a champion for the East African commercial climate movement. He not only identified way ahead of the curve that if he went down this path, it was going to unlock future financing for him, but at the same time he was doing all this, he was thinking about REITs, so I can give you a whole other presentation on what he was doing with getting the REIT market going again in Kenya. And so our bond's just been redeemed because we've managed to refinance the assets through investor REITs. Right? Again, this is in the capital markets. So, but the point is that we and others, not just us, there were other supporters, international supporters of Acorn, identified a champion and we supported him. And I think the demonstration effect of the private sector is massive. Right? If you see your competitor managing to attract all of this capital, all of this publicity, you will follow, right? And so there are, you know, I'd say there's limited benefit at this stage spending too much time with the corporates that don't quite get it, right? You need to identify those CEOs who really, really get it and really want to move the market. And then we all club together around them, DFIs, regulators, government, banks, and we make them champions. Okay, thank you.
Thank you, Philip, for helping us demystify the green bonds, and thank you for the engaging questions. We'll take a short 15-minute tea break, and then we'll come back for the next presentation. So please join us for some tea. Thank you. Ladies and gentlemen, I would request everyone to please return back to our seats so that we can commence with the second half of the presentations. I would request everyone to be please seated. Thank you. We will be moving on to the next speaker session. Please be seated. Thank you. I would now like to welcome Ms. Maheen Rahman, CEO of InfraZamin Pakistan. Ms. Rahman is a pioneer in Pakistan's financial sector, known for her commitment to innovation and sustainable growth. In her presentation, she will explore the local perspective of green financing, what are the challenges faced by local investors, comparative studies of global standards for green bonds, and she will touch base upon a framework for Pakistan as well, and how InfraZamin can facilitate green bond issuance in Pakistan. Please welcome Ms. Maheen Rahman.
Assalamu alaikum, everybody. It's truly a pleasure to be here today. Thank you very much to the State Bank of Pakistan and the Pakistan Banking Association for facilitating this session. We're really happy to be here and talk a little bit about why should we green Pakistan, why is it even relevant to our lives, and what can we as regulators, as the private sector, as financial institutions do to gain some traction in this area. So let me talk a bit about our stats, and this is going to be a very grounded presentation in the sense that we are talking really about what's going on in Pakistan, why this is relevant for us, and how just with a few minor adjustments, we can actually increase that number that you're seeing from Pakistan on green issuance and green finances. So I've got here, this is the World Economic Forum's infrastructure statistics for Pakistan. It's ranked on a scale of 137. So on the top part, you can see that we're pretty good in some areas. When it comes to cellular services, when it comes to actual electricity supply, when it comes to our tech readiness, our labor markets, we have made some ground on that front. But look at the bottom part, the bits that actually need to be filled in. So we look at our transport infrastructure, look at our agricultural infrastructure, the innovation mindset, and then finally, the easy access to loans. Incredibly difficult in Pakistan to actually get a loan from a financial institution. And why is this relevant? This is relevant because where we are underperforming is actually the areas which green finance can actually help us go up the curve on those. And let's talk about how. So here I've got the asset base of the banking sector for Pakistan. And I know while it's glaringly obvious that we lend a tremendous amount to government, that's not the focus of the slide I want to point out here. The reality is there are a number of projects in Pakistan that we do under provincial government, under federal government, and under the private sector that could be classified as green, but because we do not have the frameworks and the taxonomy in place, we don't do that. And as a result of that, we have a general distribution of areas that we lend to, but even the government is putting forward cases for electric vehicle financing, for solar projects, and so forth, but because the classification doesn't exist within our system, and it's not mandatory to report it, we are unable to actually show those numbers in our statistics and raise the overall green perception of the country. Now, what do we define as climate finance? So there's three areas. One is mitigation, then adaptation, and then resilience. Where do you think we do well? Show of hands for people who think we're good at mitigative finance. And what's mitigative finance? It's effectively reducing carbon emissions. So you have solar, you have wind, you have energy efficiency. So do you think we do fairly well in understanding mitigation and financing mitigation? Any show of hands? Yes, quite a bit. What about adaptive? Adaptive finance is when we reduce the loss of climate events. So we have to protect the natural ecosystems. We have to look at food security. We have to look at irrigation systems. We have to look at drainage systems. We look at public health. Do you think we are doing so well on adaptive? Show of hands of people who think we're doing very well on adaptive. No. So the first one is easy. The mitigation aspect is easy. But the reality is Pakistan does not contribute much to global emissions. What do you think we really need in Pakistan in terms of looking at climate finance? Do you think we need the mitigation more or the adaptive more? Show of hands for mitigation. Show of hands for adaptation. Yeah. So why is this relevant for us? Because the adaptive finance that we bring is actually what is the climate finance we need because we are climate vulnerable. So this is a commercial issue. This is actually very much about the losses that we bear because we don't do adaptive finance. And with those two in play is when you build resilient countries and resilient cities, because that's how you protect against the problems that will happen when climate events, as they do so far, continue to happen in the future. Now, who are the key players in an ecosystem of green finance? Interestingly enough, we have all the players, some in the room today. But it starts with the government, it starts with the ministries, it starts with the provincial governments in terms of their alignment to the Paris Agreement, their alignment on nationally determined contributions, and the way they structure policy around climate finance and green finance. Then we have the regulators, who tend to define what are the priority sectors that we're looking at. We are in a very interesting place on Pakistan's economic curve. We are in a place where interest rates are coming down, and so bank lending and capital market activity should pick up. It is a very good time for us to define which are the priority sectors that we wish to see this lending go to over the next 2 to 3 years. And then we have the financiers and the investors, which is the banks and the capital market investors. And let me tell you, when Phil was talking about finding champions, the tone at the top, that's what makes the difference. It really has to be bought into by the board, by the CEO, and by all the one-downs in terms of the commitment towards delivering green projects and climate finance. Then we have the borrowers and the issuers. And again, it comes from champions, it comes from those willing to take the cause up and filter that through their organizations. But other very key piece of our whole framework relates to the accreditors. The rating agencies, the accountants, who are really the ones who are in the process and have the ability to verify all these solutions. Now, we've talked about international accreditors. I think we can build those systems internally within Pakistan and create local accreditation mechanisms, which would come at a much cheaper cost to us of doing climate finance and doing green. So we've talked a bit about green bond frameworks. I will not go into this, but these two are the internationally recognized standards of green bond issuances. The SECP regulations on green bonds, as well as the state bank's green guidelines, are based effectively off these two. And this is what most countries use to develop their own internal frameworks on green finance. As Phil has already gone into the details of what constitutes, I'll not spend too much time on this. Let's look at Pakistan. So we have a net determined contribution. The Paris Agreement, by the way, was set in COP21. And the idea of the Paris Agreement was to legally bind countries to commit to certain contributions of carbon emissions and to be completely net carbon zero, as in no more new emissions, by 2050. The whole purpose of this, of course, is to reduce the temperature increase on the global range and limit that to 1.5 degrees. Unfortunately, we are not even close to achieving those metrics, even on an international basis. What's going on in Pakistan? Well, I'm sure many of you are familiar with the central bank's green banking guidelines and the SECP's framework for green bond issuances. Both of these form the baseline of our regulations today. In terms of where we stand on an international standard basis, the green bond guidelines are a very effective and comprehensive coverage of how to assess environmental risk, how to look at climate-friendly projects, and how to build green throughout the banking system. However, they continue to be voluntary, and there are no formal reporting or disclosure guidelines required by the banks. Let's talk about taxonomy. You've heard taxonomy talked about quite a bit. The reality is, unless we know what is green, we can't really classify it as green. So the SECP is probably the most far along in terms of classification of green projects. And you can see from the list, it's quite extensive. We have then the green banking guidelines here, which also have a certain classification, some of which overlaps, but not all of it. And then there are global standards on taxonomy. But effectively, it's important to identify not just the sectors that classify themselves as green, and the easy one is, of course, renewable energy. Because under renewable energy, we are very clear that carbon emissions are what we need to reduce. But as discussed just earlier, that doesn't really cover our need, which is adaptive finance, which is adaptive climate finance. And that's where the rest of it comes into. When we talk about sustainable water management, when we talk about irrigation systems, when you talk about drainage mechanisms, when you talk about food security and agricultural farming mechanisms, there we do not see much financial flow going in, either from the banks or the capital markets. Now, there's many possibilities on how to classify, and I'll leave this chart up here for you. But what I want to point to is the red box at the bottom. That while it's important to talk about what is green, it is as important to talk about what is not green. And I think there we have several exclusions already identified by the various global agencies, including areas like mining, fossil fuels, military, guns, ammunition. None of this actually come under green financing rules. So it's important to define as well what the exclusions would be when talking about the taxonomy. But once you have a system in place on the taxonomy, it's very easy then for banks, for financial institutions, and capital market investors to very clearly indicate whether or not a bond is certified or a loan is certified, whether it falls into green or not, and then the disclosure on that green becomes a lot simpler. This is a key slide. This talks about the various incentives that throughout Asia, central banks are using to encourage green financing and green bonds. And I'll talk about some of the ones which we're seeing in Pakistan, some of the ones which are more popular. Taxonomy is there in multiple jurisdictions. It is being developed or is developed in most parts of the world, so we're very happy to hear that the central bank is taking the initiative on that front. But the other thing, green credit guidance. That's something that's very popular with central banks, which includes a whole host of areas. One, mandatory limits on green financing. Secondly, reduced and concessional financing. Thirdly, focus on really developing green channels within the borrowing frameworks. And all of these are quite mandated by a number of commercial banks, particularly in India next door. Also, if we look at some of the other stuff which is now coming in, climate-related disclosures has been picked up by almost every central bank in the region, which mandates that banks and financial institutions have to disclose what projects they've invested in that fit the climate criteria and that fit green. And these are mandatory reportings, and as mentioned by Phil, they are coming to you in the form of IFRS S1 and S2. The other thing which we're seeing China really push ahead with, and I would say that out of most Asian economies, they are way ahead on the green financing game. And this is something that despite them being some of the biggest coal producers, they have actually mandated a forced reduction in coal lending by the central bank to the financial institutions. The other thing, which is very popular in India, the US, EU, as well as Malaysia and Singapore, is tax credits and tax incentives on investing in green projects. What does that mean? That means if we issue a green bond, the interest income from that bond can be considered tax exempt. It is that case for a number of countries, and that's really truly how you incentivize lending at scale for green projects. Tax relief and tax credits are both used interchangeably, but in some instances, there have even been bonds issued which do not even carry a rate of return on interest, but simply investing in those bonds allows a financial institution a significant tax credit against their tax bill. Other areas that I have seen across China as well as Singapore is looking at reserve requirements and risk weightages. Now, if you have a guaranteed bond, then that anyway carries a lower reserve requirement. But not every bond or not every green finance actually needs a guarantee. But when you invest in a green project, there should be some relief as far as the reserve requirements and the risk weightage of that project go. And that's something that we've seen mandated in other central banks who have really pushed forward the green agenda. One area that we've spoken about is risk versus reward. Now, why is it that we do not assess climate risk when it is clearly the biggest risk facing Pakistan today across our portfolio? You have a number of agricultural lending, you have manufacturing lending, you have logistics lending. Each one of these lending portfolios can face significant damage and NPLs due to climate events. But yet, we do not incorporate the impact of that climate risk into our risk assessment. We do not consider that when we take collateral for these kind of financings, that collateral could very well end up underwater or damaged. So how do we build in climate risk and quantify that into the bank's credit risk process? And that's something that we have seen the Chinese Central Bank as well as the EU has been quite strong in that, as well as Singapore and Malaysia push ahead in terms of addressing climate risk, quantifying it, and asking that to be included in the bank's credit process. And as a conduit to that, the EU has recently conducted climate stress testing on bank portfolios, which means can we assess how vulnerable the actual portfolio of a bank may be. According to traditional standards, we may be looking at very low levels of vulnerability, but when you add in factors such as climate stress testing, you do find gaps which need to be addressed within the credit process as well. And I won't go into these in some detail, but the slide kind of highlights for you how other countries, markets, and economies have really incentivized the green debate. And of course, the central bank or state bank will be very familiar with a lot of these. Reserve requirements, reduced risk weightages, they're applied to other forms of concessional finance and lending as well. But because concessional finance becomes problematic for us due to the IMF conditionalities, we can adopt other areas and other incentives that can overcome that issue. And that's something that, while we are discussing this topic, I would really encourage the State Bank of Pakistan to engage and see how these incentives can also be built into our own green banking frameworks. Okay, so why issue green? And here's the thing with the borrowers. Most people who come to InfraZamin and GuarantCo, they don't do it because they want to issue green. They do it because they want financing. So when we talk to them about going green, we usually can't progress until the mindset is correct. And we can't really work with issuers who are not interested in that concept and are just looking for a pricing arbitrage or just looking for just pure capital raising. But because the type of issuers that do come to us are open-minded, willing to explore new innovative solutions, we get beyond the mindset point pretty quickly. And with then, we can layer in green implications. However, there are costs associated with this. Incentives are important, so many times the borrower often asks us the question, why should I do this if it's going to cost me so much money? And what our response as GuarantCo and InfraZamin is that we tend to subsidize a lot of the cost of the borrowing through grants and incentives. We have our own technical assistance facility, and most of our projects will avail part of that technical assistance to bring down the cost of financing. But that's not sustainable. We cannot be the one that is incentivizing the borrower. It has to come from the market. So what is the facilitations that we can look at, which other countries have done? One, tax credits, tax incentives on green investments. Secondly, grant availability. Technical assistance is available to us from the British government, but there are multiple technical assistances that can be taken from multilateral institutions, which can cover a lot of the costs on certification. Thirdly, fast-track approvals. When we come to issue a bond, there are often regulatory approvals needed, whether it is SECP. There can also be sometimes state bank approvals. Fast-tracking is important. Access to carbon credits. This is a really interesting one, and I'll talk about the carbon credit market and why it's important for us to develop that framework as well. And finally, the local development of accreditation mechanisms. Why should we go internationally for accreditation when we can link that up to domestic institutions? We have rating agencies here, we have a number of other institutions that are involved in accreditation. We must support them. And just like we have specific valuators in the state bank, we should have accreditation agents which are domestic and registered here that are able to accredit local projects as well. And finally, talking about reducing the cost of bond issuance, it is quite a shame that if an investor wishes to go to the capital markets, chances are he will pay up to 1.5% more of the total cost or the total size of the bond in additional issuance costs. Now, in the past, we have actually used technical assistance from InfraZamin and GuarantCo to reduce that cost. But this is a burden on investors. And why should they be the ones who are bearing that cost of taking initiative? We should find ways as a regulator to bring that cost of issuance down, both from the capital market side as well as from the bank financing side. Why should banks do this? Why should capital markets invest here? Again, mindsets. Phil talked about champions, and it has to really start from there. Mindsets are critical and they are important, but we cannot rely on them as the only factor. They have to look at tax credits, tax investments. They have to look at de-risking solutions. This is very critical for green projects, which the banking sector is taking on. Fast-track approvals. Again, same for the banks. It takes a long time to get through a credit approval process. If something is identified as green, there should be the ability to bring it through quicker. Risk weights on green financing. There are multiple central banks across Asia that have mandated lower risk weights. Better risk assessment with the inclusion of climate risk. The green banking guidelines cover environmental risk protections very well. And there are a number of mandatory requirements that we have where environmental risk has to be assessed or has to be reduced. But risk assessment is more than just what damage that particular project may do to the environment. It's also the benefits of that project to the environment. So it's a whole two-way cycle. It doesn't just sit on one side alone. Reserve requirements on green investments, a number of, especially the Chinese central bank has done that. The other thing the Chinese central bank has done is via its asset purchases included green bonds as acceptable collateral in many instances as well. So there are a number of incentives that go well beyond subsidized schemes that can assist with this ecosystem. Now, how do you de-risk? And this is quite simple. You de-risk either through a loan or through a sukuk or a TFC. And we've done both. As InfraZamin and GuarantCo, we have done both. With the banks, in terms of the financing aspect, we cover up to 75% of principal risk. It's payable on demand in case of a non-payment event. It is unconditional and irrevocable guarantee. And it's all local currency based. So it makes a lot of sense for local projects which carry a certain amount of risk and are not being financed by the banks or the capital markets to avail of the guarantee. We do similar structures with sukuks and TFCs, but because it's capital markets, we can give up to 100% protection on the principal. Again, payable completely on demand on a non-payment event, and it's all local currency-based pricing. So these can be very powerful tools to de-risk, bring down the overall risk framework of an investment that may seem new or familiar at that time. Carbon credits. We've not talked enough about carbon credits. Now, what are carbon credits, and has anyone in Pakistan actually availed them? Actually, one of the most successful projects on carbon credits comes from Pakistan. It's the Delta Brew project on carbon pricing, which is a mangrove replantation project. Now, because there are a number of international verifiers, there are some that we use in Pakistan as well, what you have to do is, if you have a carbon project, or if you have, for example, you're planting a forest, that forest can be eligible for a certain number of carbon credits, let's say 100. If you're verified by any one of these institutions on those carbon credits, you can then sell that stock of carbon credits in the international market. And that's a dollar-based form of revenue for yourselves. Any idea how much one carbon credit verified by Vera can get you in the international market? Any guesses? $5? Hands up on $5? 10? 100? So the average carbon credit done by Vera, which is the gold standard, is about $55. One. And if you issue 100 of those, you made $5,500 on an annual recurring basis. Most projects in Pakistan, whether they are renewable energy, reforestation, mangroves, are eligible for thousands of credits. So those thousands of credits, when verified, sold internationally, can result in hundreds of millions of dollars flowing into the country. And this is an advantage that we need to pick up, because as Pakistan, we're not a carbon emitter. And we are taking on projects that reduce carbon emissions further. We can get accredited, and we can also sell those carbon credits in future as well. So what is the development of the green bond framework? I think we've learned a lot about what constitutes green and how it works. But what are the steps we now need to take as regulators and as the market? I think we've got a good first start, which is the green banking guidelines. What we need to do next is make sure that we're aligned on CBI and ICMA standards on green bonds, definition of taxonomy and priority sectors, and accreditation agency frameworks to make it easy to get green financing certified as green. And then we can move to disclosures. So disclosures, reporting, standards, carbon market development, very crucial. We have one agency in Pakistan, the Pakistan Environment Trust, that issues local carbon credits. They are not as valuable as international carbon credits, but they are a start. We need to encourage and support more of that so that carbon credits and a carbon market develop here. We're already seeing IFRS S1, S2 disclosures come out and be mandatory. The other areas we need to look at, and this is very important, is the incentive structures and the SBP green credit guidance mechanisms. Central banks across Asia have used these extensively to push and promote and commercialize green finance rather than simply leave it to mindsets and champions alone. Approval should be fast-tracked, and credit enhancement and de-risking should be encouraged where banks or capital markets feel they cannot absorb that risk themselves. And then finally, all of that needs to be done in a repetitive motion so that you have a continuous evaluation, monitoring, and feedback of the system itself. But really, these are kind of the broad steps which I would say China has taken the lead in, India is following very strongly. Bangladesh recently made it mandatory to report disclosures. And then you have the more developed markets of Singapore, the EU, and the US, all of which have pushed this out quite extensively over the last 2 to 3 years. I'm now going to do a quick audience exercise and close out with this. So back in 23, we issued a gender bond. You might be familiar with the SECP guidelines today, and this is why taxonomy is so important. There was no component of renewable energy. We could not find that classification within the system, and we didn't have that as a use of proceeds. There was no real element of clean transportation either, or some of the other aspects that we see. We did adapt to climate, but we weren't very energy efficient around this. So we decided to issue this as a sustainability bond or a gender bond or social bond. Because it is important that if we had gone for international verification, we probably wouldn't have got the green stamp. What could we have done to make it more green? And this is really simple because this is what can be done with all projects. How can we make them that little bit more green? The renovations that we suggested for houses could have included upgrades to be energy efficient, to be climate adaptive, better insulation, energy-saving appliances. We could have talked about biodiversity conservation. A lot of the loans were given out in rural areas where floods had actually happened. Did we talk about including elements of reforestation, replantation, things like that that could have made this a bit more green? Also, could we have sourced locally available sustainable materials? There was a whole drive, I think, conducted by Bank of Punjab on bamboos and using bamboos to reconstruct houses. Yes, if we had mandated that, we could have probably gone with green. Ji, sir. Yeah. So, yes.
It's really not reducing that impact. All you're doing is rebuilding. And you're putting in a few things, that kind of get close to greenwashing, I would say.
Yeah. So we did classify this bond as green because of those reasons. And what we did on adaptation was that the houses that were swept away were often mud houses, because that's what was there in these rural areas. So we mandated the houses that were to be built would be of concrete and materials that would not wash away in flood. So that's how we adapted to that part of the climate. But because of these issues that you also pointed out, we could not have classified this bond as green, but it certainly did fulfill the mandate of gender, inclusivity, and sustainability. Problems in qualifying as a green bond, which the gentleman has just pointed out. There would have been higher certification costs, and in reality, no real incentive for the issuer. When Kashf talked to us about this, they said, why should we make it green? Why should we include all those bits that will make it green? And in reality, they had no further incentive other than to access the capital markets and create gender-linked financing, because that was their actual business. Let's talk about the most recent bond that we've just announced. We announced it last week, which is the agri-infrastructure bond that we are doing with Sunridge Foods. For those of you who are not familiar with the transaction, 65% of the use of proceeds is towards BMR, which includes solar, it includes wind, it includes food storage, it includes warehousing, includes energy efficiency, among other aspects. Do you think we could have classified this as green? Hands up for yes. Very doubtful hands. Raise higher. Okay, so out of the people thinking we should have classified this as green, what are the reasons? Yeah.
Renewable energy.
So renewable energy,
yeah,
food security,
yeah. So
adaptive, climate
it can be
impacts.
classified.
What else? Any other aspects? Yeah.
Human development also, because we'll be generating jobs in the market, like in agri-based jobs as well.
So job creation is a natural outcome of every sustainable green, blue, yellow bond. So it doesn't quite come under green, but I think to the gentleman's point that yes, we could have probably classified this as a green bond under the the issuance guidelines. The only aspect we were kind of missing in the green framework was clean transport, but we had quite a lot of green implications within the bond itself. So while we launch it, we are launching it under agricultural infrastructure. We may in the future consider getting it accredited. What are the reasons that we didn't? Again, the certification cost and the annual monitoring that would be required in the bond and the costs associated with that. So we also have to look at the issuer's desire. Now, the issuer can be in the market for a very specific purpose. In this case, they needed to raise funds for their agri-processing plant, and they didn't want to incur the additional costs of being certified, especially if the market itself would not give them any benefit for that certification. So we went with a sukuk structure on this bond, and we went under sustainability, so it would be counted as a sustainability bond. In the future, we could potentially think about getting this certified as well. Okay. I think that's it. Right, so that's it from me, but I hope that we have given you a good flavor of what it's like to classify green, implement green within the system, and also develop the right regulatory and policy framework to encourage green, both from the market as well as from project owners and potential borrowers. 𝐷 Rahman sahab.
Hello. Thank you. It was a great presentation. I think both Philip and yourselves have really covered the bond issuance part. A couple of thoughts, and I think maybe, if it's not too bad, maybe Philip or yourselves could answer. You know, when we approach this as a project finance, really, because we're talking about following the money to where it is being used, as well as seeing that the purpose that you raise money for, that is what it fulfills. Now, in certain climactic events, right, you can either try to give money to an individual economic agent, like a company, but the problem itself is a macro or a global problem, right? Certain things should be classified more as, you know, governmental related mitigations. And therefore the financing should go to a government or a program of that sort, versus individual companies. And second part, and I think when we talk, everybody's been talking about incentives and costs. The question really also boils down to insurance costs. Because if you're talking about environment and sustainability and climate change, really when I used to do project finance, and I think it's still done, is that you do risk matrices, right? Yep. And the risk matrix, one part of that is the insurance risks. Yes. Yes. And the insurers, the insurance advisors usually guide what kind of insurances should be taken. Now, if there's a macro effort or a countrywide or an effort, then you can talk about reducing insurance premium for those specific events. But and that is a saving, but I don't know how that is in this conversation. We've kind of missed it. Yes, I don't know.
So let me address the first part first, which is, shouldn't the government be more involved? Yes, 100%. Some of the biggest issuances, Singapore and China, have actually been state enterprises and even state governments. In the US, municipal corporations actually issue these green bonds very effectively, and investors avail tax credits on them as well. So in the context of Government of Pakistan, the interesting thing is that we have actually seen a number of projects come out from Government of Pakistan, provincial level and federal level, that can be classified as green, but that further step is not taken by the government. Why is that relevant? Because you as the banks will come to finance those projects in any case, right? So it would be nice to link both those aspects as well. So many times we see the first mover being done by the government. The investors end up being the banks and capital market investors in those. And then it also does dovetail very quickly into the private sector as well. So again, the whole framework, like I pointed out in the first slide, has to be in place. In terms of insurance, it's a very key piece in project finance. There is insurance in every one of the project finance aspects we do. There is some elements of insurance that are not there in the local insurance market, which have to be built in and they have to be developed. But yes, absolutely, the insurance aspect is something that always factors in. I don't know, Phil, if you want to add something to that argument.
Yeah, just on the insurance point, maybe just to bring in some interesting, really sort of fresh stuff that's coming out of the Lloyd's insurance market in London in regards to carbon projects at the moment. So what the insurance market has recognized is that all of these large corporations, the Microsofts, the Amazons of this world, who have incredibly ambitious net zero strategies, can only achieve this through offsetting with carbon credits.
Yeah.
And so they see a huge growth in insurance for carbon credit projects. And what we've started to see this year is the first project finance for carbon projects. So I'll give you an example of one is with a company called Undo, and they do enhanced rock weathering, where they grind up basalt rock and put it on fields, and that sequesters carbon. That company raised money from Standard Chartered on the back of two things. One, an offtake contract with British Airways to buy all the carbon credits, which secured price and quantity for the carbon credits. And then delivery risk of those carbon credits was 100% insured away through the Lloyd's insurance market. And so on that project, the only risk that Standard Chartered is taking is British Airways offtake, right? And that type of insurance is also available for nature-based carbon projects as well, like the Delta Blue Carbon Mangrove project here in Pakistan. And so what's happening in the insurance market is quite incredible. You know, working in an infrastructure for, you know, all the time I've had, and as Maheen rightly points out, there's huge gaps in what you can actually insure away in a country like Pakistan. But I think what's going on with the carbon markets, we're going to see insurance availability increase in a way that is going to be quite revolutionary.
Thank you. We have one question here. Yeah.
Thank you for a very valuable insight in this area. What I want to understand is there are certain opportunities like carbon credits and forestation, like you mentioned. If that is linked with a structured socio-economic development related to agriculture, for example, Pakistan is new into olive sector. And it has been declared that Pakistan can beat Spain, which produces 40% of world olive, and become world largest olive producer because of the geographical area declared suitable for plantation. The potential requires 75 million trees to cultivate all the areas. We have so far planted 5 million trees only. The cost of the trees alone is about $300 million. There are several government, provincial and federal government projects which are involved in distribution of trees. If that is linked with this carbon credit program and funded from the carbon credits, it has an enormous socio-economic value as well, because this is a drought-resistant plant, and these are being cultivated in areas which are not presently cultivated. These are arid areas, very, poverty-stricken areas. So if such a program on mass level involving government, private sector, farmers, and carbon credit, what's your view on that?
I would say yes, a short answer, and it's already been done, would be the second answer. So in Pakistan, like I mentioned, the most successful is actually the Delta Blue Carbon Project, which is the replantation which the Sindh government has undertaken with a private party on mangroves, right? So how they have done that is, I think there's 400,000 hectares, which is earmarked for that project. 100,000 has been completed. And the carbon credits that are being generated from that are being used for exactly the points that you were saying, to cover the cost of the replantation and to encourage further replantation as well. So carbon credits can act as a big gap filler as far as revenue is concerned for such projects. I think there are a number of others being undertaken on forestation as well. And I think, Phil is actually the lead for Nature for Pitch, and more we are seeing this market being pushed forward and developed to be the actual revenue source on social development projects which don't carry that revenue. So you can actually gain that revenue from carbon credits. So I think absolutely, it is a really important sector that we haven't quite fully explored. Having said that, there are a number of companies in Pakistan already availing carbon credits and receiving and trading them internationally as well, but it is still a handful. I think we need to see more support around this idea, more capacity building, particularly in explaining to project owners how this can happen, and as well to financiers on how this can help fill the gaps in financing which they are seeing, which is why the risky projects don't come forward. Okay. Any other questions? Ji Inayat Saab.
Thank you, Maheen, for very informative presentation. So you mentioned the development of local market for carbon credit. So one, what needs to be done to develop that market, and do you think that there would, most probably there would be sellers, but would there be buyers as well? Because most of the buyers of carbon credit, at least what I know, and I have very limited knowledge, is generally international firms like, for example, as Phil mentioned, British Airways. So that is one. The second is that if we do develop, for example, a local market, will it help us in integrating that market with international market? Because of course, from economic perspective, it would make much more sense for Pakistan to actually trade those carbon credit internationally and generate foreign exchange.
Yes, so can we develop it locally? Yes, we can. We do already have institutions that are doing it. The challenge comes, as you pointed out, in developing or finding and connecting the dots between sellers and buyers. So once you have created the carbon credit, the same institutions internationally that would be buying, which is airlines, which is fossil fuel users and extractors, would also be the local buyers of those carbon credits if the market is in place. The other things that kind of come out of this are also carbon pricing. So what is the local price of carbon in the local market, and also in some cases such as Singapore, carbon tax. So sometimes to offset the carbon taxation, there is a whole local market that's developed to account for that aspect, so the buyers can actually offset the carbon taxation by buying. So it is a whole local ecosystem that can be created. Can it link back internationally? Of course. In terms of the issuers domestically or the accreditors domestically, they should have some form of international linkage or certification from some of the companies that are doing this on a global scale. And I think that's important. But similarly to how we have created rating agencies locally in the domestic market, some of which are now working internationally as well, you can have similar accreditors here also, but you do need a set of rules and policies because right now they are being governed effectively in terms of their own sense. So it's not really coming from within the ecosystem itself. Now, there is always going to be a difference in the carbon price you can get domestically from domestic accreditors versus internationally. Of course, the international carbon market is priced higher, but the costs of that accreditation are also quite high. So the technical assistance piece there is quite important. It can take almost a year to get fully accredited before you can begin carbon trading internationally. If the projects make sense, it is well worth it to go down that route. Okay. Any other questions? Okay, thank you very much. This has been lovely morning with you. Thank you. I hope we've enlightened some aspects or demystified this a bit for you. Thank you very much.
Thank you, Maheen, for a very insightful presentation and for the engaging questions by the audience. To conclude today's event, we are honored to have Mr. Munir Kamal, CEO of the Pakistan Banks Association. With decades of experience in banking and financial leadership, Mr. Kamal is a highly respected figure in Pakistan's financial community. His keynote will emphasize the critical role of the banking industry in supporting and advancing green financing in Pakistan. Please welcome Mr. Munir Kamal.
Thank you very much. Since I'm the last speaker, I promise you I won't take more than 5 minutes, probably less than that. But just some numbers to set the tone that what Pakistan is facing at the moment. Then I think last year's World Bank COP report said that Pakistan's climate and development challenges between the year 2023 and 2030 will be around $348 billion. And if this remains unaddressed, our GDP can go down by 18 to 20% per year by 2050. Now, add to this the fact that Pakistan is 8th most vulnerable country in climate crisis, and we can come to the conclusion that this is a nightmare situation if we do not address this. The good news is that at least the financial sector is taking some steps, maybe the baby steps, and it starts from our regulator in 2017 coming up with the green financing guidelines. And I was quite surprised when it was 7 years back. And now in 2022, they've come up with a manual of environmental and social manual. So the pace is set by our regulators, and I believe SECP has also taken appropriate steps so that the corporates can go ahead and issue the green bonds. So with this background, when my colleague Hafsa came and asked whether we can join InfraZamin for this particular meeting that we're going through, I didn't even blink an eyelid and said yes. And the reason why I said yes, well, there were 2 or 3 reasons. One was, as a matter of full disclosure, I'm on the board of InfraZamin. And this is a young organization. It's been 4 years, and I've been associated with it for 4 years. And it's an incredible, unique institution that has developed. And even in my age, old age, whenever I attend a meeting, board meeting or committee meetings, I come out learning something fresh, something new. So, Mr. Skinner, thank you very much for coming to Pakistan. And it's an incredible institution. Maheen talked about the gender bond that we did, 2.2 billion. Staggering. I mean, this was the whole concept. I don't want to spend too much time on that. So I am absolutely privileged to occupy a frontline seat in InfraZamin and watch this incredible institution coming forward. The other reason I said yes was I do know for the last 5-6 months I'm associated with Pakistan Bank Association, and the banking story somehow does not make headlines in Pakistan. The only headline that makes is that we make a lot of money, and we are not embarrassed to say, yes, we do make money. I know for a fact that Habib Bank, National Bank, has a green officer. Habib Bank is something doing unique. Atif Bajwa is not here. Al-Falai, and I'm sure other banks are done. So what we are doing at PBA now, Hafsa has been interested, and she's working on developing an impact report of the entire banking sector, of where we are in the social side and environment side, what this industry is doing. And I can promise you, we are in the forefront compared to any other, despite the fact that we occasionally also finance coal-fired energy products. But again, we don't have to feel embarrassed about it. We won't do it more, I guess. So a promise from Pakistan Bank Association, I'm banking industry. We will let you know in a couple of months what the industry is doing and where the industry is going forward in this area. And we are very proud about the fact that banking sector, I'll repeat again, is in forefront compared to any other industry in this matter, and supported and guided by a regulator. So that's all I'm going to say. This was an incredible session. Thank you very much, InfraZamin, State Bank, and Speaker Mr. Skinner coming all the way from London, despite the fact that his team lost 2-1 just a few weeks back. So good luck next time, maybe. And against Australia, we'll support you. So thank you very much. And it was a great session. Thank you.
Thank you, Mr. Kamal, for your impactful insights and for highlighting the role of the Pakistan's banking sector in promoting green finance. In the end, on behalf of InfraZamin Pakistan, I would like to express our sincere gratitude to Mr. Jameel Ahmed, Governor, State Bank, Dr. Inayat Hussain, Deputy Governor, State Bank, Mr. Salimullah, Deputy Governor, State Bank, Mr. Shaukat Ali, Executive Director, State Bank, Mr. Mohammad Nabil Akhtar, Joint Director, State Bank, Mr. Amir Hassan, Director, FSD, Ms. Amna Shabir, Deputy Secretary, Banking, Ministry of Finance, Ms. Susanna House, Second Secretary, British Deputy High Commission, the Pakistan Banking Association, and our distinguished guests for their valuable contributions and engagement today. We will proceed to lunch shortly. In the meantime, I would like to request the speakers to come to stage for a group photo. In addition, I would request Ms. Amna Shabir, Dr. Inayat Hussain, Mr. Salimullah, and Ms. Susanna to join us for the group photo as well. Thank you. There's the photographer. We can now proceed to lunch. Lunch is served. Thank you, everyone, for a very engaging event. Thank you.